Japan's crypto breakthrough. Japan's finance minister says crypto belongs on stock exchanges. Big move for 2026. Why this matters right now. January 5th, 2026. Something big just dropped in both the world of crypto and traditional finance. Japan's finance minister, Satsuki Katayama, publicly backed the idea of integrating crypto assets into the country's stock and commodity exchanges. That means bringing digital currencies and blockchain-based assets inside regulated markets that millions of everyday investors already know and trust. In a world where regulators and governments have mostly kept crypto at arm's length, or even hostile, Japan's move is different. It signals a deliberate shift toward mainstreaming digital assets under existing financial structures. Today, we're going to break down what the finance minister actually said, how Japan plans to make this happen, what it means for investors, crypto markets, and global finance, potential challenges and risks, the future of finance and where this could lead. Buckle up, because this could be one of the most consequential regulatory moments in crypto history. What happened in Japan? Official announcement and context. On January 5th, 2026, Finance Minister Satsuki Katayama stood at the Tokyo Stock Exchange's New Year opening ceremony and made remarks that are turning heads around the world. She said, "The government supports integrating digital assets, including cryptocurrencies, into the nation's traditional stock and commodity exchanges." That's a significant pivot from crypto being siloed into separate, less regulated markets. Katayama didn't just frame it as a technical change. She declared 2026 the start of Japan's digital era, making this year especially important for digital finance. Let's unpack what all of that means. Why this is a big deal. Crypto moves inside regulated finance. Until now, cryptocurrencies in most countries, including Japan, have largely existed outside traditional financial market infrastructure. They were traded on crypto-only exchanges or decentralized marketplaces, often with weaker investor protections and varying legal clarity. Now, Japan wants crypto traded where stocks and ETFs are traded, under the umbrella of existing regulatory structures. This move could bring stronger oversight and protection for investors, make crypto trading accessible through existing brokerages, allow investors to hold stocks and crypto in the same account, reduce reliance on offshore or unregistered platforms. Imagine logging into your brokerage app and seeing Bitcoin, Ethereum, and other digital assets lined up next to Apple, Tesla, or bank stocks. That's the kind of vision Japan seems to be pushing. This marks a historic convergence of TradFi and crypto, Japan's broader crypto strategy. Today's announcement didn't come in isolation. It's part of a much bigger strategic shift in Japan's financial system. Tax reform. Japan is set to overhaul how cryptocurrencies are taxed. Previously, crypto profits could be taxed at up to 55%, which discouraged traders and investors. Now, the government plans to impose a flat 20% tax, aligning crypto with stocks and ETFs. AI Invest. This one change alone could dramatically increase retail and institutional participation, reduce tax-driven selling pressure, position digital assets as competitive investment vehicles, legal reclassification. Japan also plans to treat major cryptocurrencies as financial products under the Financial Instruments and Exchange Act, the same statute that regulates stocks, bonds, and ETFs. That change has major implications. Crypto trades could fall under traditional securities rules. Insider trading laws could apply. Stronger reporting and transparency standards could be enforced. This set of changes positions crypto not as a fringe asset class, but as a regulated, mainstream one. Exchanges, new market gateways. One of the most actionable parts of this policy is where crypto could be traded in the future, regulated stock and commodity exchanges. Japan's biggest exchanges, like the Tokyo Stock Exchange, would need to upgrade their technology and risk systems to handle crypto's unique volatility and settlement requirements. That might include real-time price feeds from global crypto markets, rapid settlement systems, strong custody solutions for digital assets, advanced risk controls. Integrating blockchain-based assets into traditional exchange infrastructure would blur the line between crypto and conventional finance like never before. What Katayama said, in plain English, let's break down Katayama's remarks in human terms. She said, crypto should be accessible through regulated markets. Traditional exchanges should act as the gateway for digital assets. Regulations should protect investors but not stifle innovation. 2026 is Japan's digital year, a turning point for finance. This is notable because many countries have resisted such integration, especially in conservative financial hubs like Japan, known for cautious regulation. What this means for investors. Retail investors. For everyday traders, easier access to crypto through existing accounts. Potentially lower tax burdens. No need to juggle separate exchange accounts. This could significantly lower the barrier to entry for new crypto investors in Japan. Institutional investors. Institutions like pension funds and insurers often cannot trade unregulated assets. Moving crypto onto stock exchanges opens institutional capital to digital assets, brings more liquidity, improves market stability. Institutional demand could be one of the biggest long-term effects of this policy. Ripple effects around the world. Japan's approach is unlikely to stay isolated. If Japan can successfully integrate crypto into traditional markets, other Asian financial centers may follow. European regulators could accelerate similar changes. The US and global markets might broaden their ETF and listed crypto offerings. We could see a wave of regulatory convergence, where digital assets are normalized within established financial systems globally. Potential challenges and risks. No policy is without challenges. Some key hurdles include volatility. Crypto moves faster and with greater swings than traditional stocks. Exchanges would need robust risk systems, custody and security. Holding digital assets securely is different from holding traditional securities, requiring cutting-edge custody solutions. Global coordination. Japan's moves might attract international capital, but inconsistent global regulation could complicate cross-border trading. Market integrity. Ensuring crypto markets are free from manipulation remains a major concern, especially when integrating with legacy systems. These challenges aren't trivial, but Japan's proposal shows regulators are willing to think through them rather than retreat. Recap. What this could mean for you. Let's simplify what this all adds up to, especially if you're a crypto investor or trader. Lower taxes on crypto profits. Crypto in regulated exchanges equals safer markets. Better access for ordinary investors. More institutional money flowing into crypto. Japan setting a global precedent. This is a huge moment in the ongoing story of crypto's evolution from fringe asset to mainstream finance powerhouse. Big picture, crypto's future in 2026. Japan's move suggests we're entering a new phase of digital finance. Digital assets are no longer alternative. They're becoming part of mainstream markets. Regulators are recognizing crypto's role in future finance. Investors will have more options and more regulated pathways. Financial markets worldwide may follow suit. If 2025 was the year of crypto expansion, then 2026 might be the year of crypto integration, where digital assets find a stable home inside the global financial system. What to watch next? Keep your eyes on how Japanese exchanges implement these changes. New crypto-linked ETFs and investment products. Institutional adoption trends. Regulatory responses in Europe, the US, and Asia. This story will keep evolving, and it could redefine how we invest, trade, and think about money itself. If you enjoyed this in-depth analysis, hit like, subscribe, and ring the bell so you don't miss future updates on this developing story. Leave a comment below. Do you think other countries will follow Japan's lead? Are traditional markets ready for crypto? Stay aware, stay awake. This is Felix. Thanks for watching, and see you next time.